when you're looking into companies with high short interest, a lot of the times a short interest company has high short interest for a reason. A lot of the times a company has high short interest because they suck, or they have bad financials, they make a bad product, their CEO's leaving, whatever is causing a lot of people to short the stock. Especially when you get into the range of a company like SG here, where they're at a $1 billion market cap. Their free float's about 100 million shares. So there's enough there to bully the price around. And if you're not right, meaning you long a company with high short interest, and you don't get your short squeeze, essentially, the price can continue to get bullied down, especially as people either A, sell or B, short it. So it's not that saying it can't work. Of course it can. Any short squeeze trade can work. But you got to keep in mind that if something is highly shorted, there may be a reason for that. Like with Beyond Meat. When we saw Beyond take off, right? It's still going. But let's not forget the pain that it got it down to 50 cents, right? So let's remember that this stock, let's go out on the monthly. So this is an example of why you want to be careful with highly shorted names. This is Beyond Meat. That's getting a push right now. It's getting a squeeze, etc. Everyone and their dog is talking about it. However, this back in 2021, you guys know this, was very expensive. It was $160, dropping all the way down to, we'll call it the beginning of 2024, was still trading at 11 bucks. And then if you want to go a little bit further, at the start of 2025, we were trading at 384. So now you're over that, which is great. But that doesn't change the fact that, let's say this whole time as Beyond was going down, you're thinking short squeeze, it's going to short squeeze, it's going to short squeeze, it's high short interest, right? And you keep longing and longing and longing and longing and longing and longing. Now you're getting the squeeze, right now. Even after it hit 50 cents, and even if you kept dollar cost averaging in, depending on where you entered, you may still be red. Because you just did it wrong. And not that you personally did it wrong, but because playing these high short interest names, you have to be very calculated, not only in your risk, but also in your entry. Look at these weekly candles here. Like, it's not common, right? It's because it's a short squeeze. Shorts are getting squeezed. They are. It's what's happening here. When you see price action like this, of course, you can make a lot of money if you're in at the right time, but you don't want to be the guy who's over here. You don't want to be the guy who's been loading Beyond stock for the last year, right? Because mind you, even just 3 months ago, Beyond was up at like $4. So let's pretend that you decided that I think Beyond's going to short squeeze because I saw it break the 200 MA right here on 7/24/2025. And let's say you don't manage your risk, you have no stop losses on whatever. It grinds down. Now think of the mental anguish you put yourself in because you bought the stock at $4. It grinds down to like 2, and then it starts doing this wild gappy action. It drops down to 1, moves back up to 2, then drops all the way to 50 cents. Are you going to hold through all of this to then get squeezed to $5, which again, and we're assuming here, let's pretend that you want in on the long here when it looks like it might have squeezed. So let's say you buy like right around here to there. How much of a gain is that? 40% to 659. So let's pretend you get it out at the current price. I hate when it does this. Hold on one second. Let's go like that. Drag that down. There we go. So let's say you got out at like the current price, which is right on here. That's a 20% gain. Not only did you wait this whole time, you went through all of the mental anguish, so you're risking mental capital here for 20%. I'm sure a lot of you can make 20% a lot faster than doing this. So please be very, very careful with high short interest names because, yes, they're attractive. Everyone in retail goes, oh, buy Beyond Meat. Everyone buy it. It's going to $90 million a share or whatever. There are times where you want to get on these trends, and you can. When they back test, when they make sense, when they cool off, or if you are going to get in, by all means get in, but have the appropriate risk in mind. You want to get in when it's here at $1, when it's here, when it's even $2 yesterday or $3 even. If you want to get in, right? Then you can now say, hey, instead of waiting a whole month, risking my mental capital and whatever, I'm going to get in on the short squeeze with everyone else. You could be a dumb FOMO-y retail investor, and you can do this, right? There's nothing wrong with it. I make dumb trades sometimes too, and they make money. You can do this just from yesterday and make 67%. What sounds better to you? So that's what I would like to say in regards to longing high short interest names. You want to be very, very cautious in not only what you pick, but also when you enter and how you size those trades.